Anchor Capital is a more recently listed asset management business founded by CEO Peter Armitage.
Yeah, we like talking about this one because it's been a rocket ship, although I must say in the last sort of 8 or 9 months, maybe a little bit more, it has come down a bit. Some of the acquisitions they've made in recent times have, in my sense anyway, taken them out of their comfort zone into a bit more of a risky environment.
Market cap 2.2 billion rand, trades on a PE of 21.8 and a dividend yield here of 2.8%. So that's Paul's opinion.
Yeah, look, under Peter Armitage, it's been a success story in terms of growing from small beginnings in 2012 now to a fully fledged asset manager, 45 billion in assets under management, becoming a player in the marketplace.
And in a short time frame.
Yeah, absolutely. They have been growing by acquisition as well. They've entered the hedge fund management space through the acquisition of a significant minority share of Capricorn Fund Managers. And it is a very cyclical business. It's very performance-free driven. That's the nature. So on the up, it's good, but it also can sort of hurt you on the way down.
Let's get a look at the share price performance, and that'll give us a sense of where we're going on this one.
Yeah, I don't know quite why it says 5 years top right there, but it actually looks more like a sort of 2.5 year chart, which makes sense. So you can see it went rocketing up there. It gets to nearly 17 rands a share, and since then it's settled back a little bit.
So you're expecting a sideways movement from here?
You know, it's still rated at a pretty high level relative to its assets under management. If you go back to Coronation and you see how much its market cap is relative to how much it manages, Anchor's is a much higher number if you do a look through to the actual assets they manage, including accounting for minority positions. So I just think, again, people are very excited about how it's going to do. Astoria, their other current ventures, had a little bit of a rocky start with the rand being so volatile. So it's created a lot of excitement and enthusiasm. But
and actually
in a
that
way,
excitement and enthusiasm is really working against it because people are expecting so much.
And it's again quite a lot of inside shareholding here. So their unit trust owns the stock, their customers own the stock, they own the stock. So there isn't that much of a free float. People have done well.
Anything to add, Ryan?
Well, they did very well last year, being overweight rand hedge stocks, and with the rand weakening significantly, that sector performed particularly well. They listed that Astoria, it's a dollar listed asset. It's down about 30% from listing, so it hasn't all been plain sailing. So I think we could see a moderation in the strong performance fees that they've been earning, and that would put some dampener on the growth. I think there'll still be strong earnings growth, but more muted than it has been in the past.
Hot or not, I'm going to get Rowan to call it first. You just keep quiet. Hot or not?
I think there's better value elsewhere, not.
Now let's see. Let's put it to you.
You know, I think it must be said that Peter has done a tremendous job, and there are a lot of other investment managers who are either in listed entities or unlisted entities that really have to take their hats off to the value he's created and the enthusiasm and the energy of his young team.
Coming. Is there a but?
But for me, I'm not going to go hot on the stock. For
not
me,
hot.
That's not a not hot. But Pete, if you're watching, hats off. This hat off as well.